Crypto Metaverse.
My first crypto winter was 2014. So I was in 13. I rode it all the way down 82% and all the way back up again into 2018. It feels much worse now because the number of participants in it is much broader. Everybody's angry. Everybody's fed up. Everybody's miserable losing money. But if you zoom out, ETH is back to where it was a year ago. So, but it feels a lot worse than it did then. It's weird. It just feels miserable.
Crypto markets have continued on their downward trend, with the threat of further monetary tightening hanging heavy over investors' heads. With Bitcoin at $28,000 and Ethereum in at $1,700, the question on all crypto investors' mind is how much lower will it go? In his latest crypto panel, macro investor and notorious crypto bull Raoul explains why he believes that although he thinks more pain is coming, the bottom is very close. Raoul also explains why he is still fiercely bullish on Ethereum over the coming year and beyond. Make sure to stick around to the end of the video where I will cover some of the latest on-chain Ethereum data to see if it backs up Raoul's thesis. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
My view is that we're probably going faster into recession than anybody expects and probably much deeper. I think that's coming. I think we've got a replay of 1974 underway, which was the ISM the Institute of Supply Managers Survey, which is a good guide to the business cycle, went from 56 to 30 in 4 months. Similar setup with oil prices screaming higher, supply restrictions, rates going up, the Fed hiking, all of the same stuff. And there's several of these in history. Equities don't like it generally. The bond market tends to turn earlier, which I've been waiting for. And bonds have started rallying to say, you know what, things have gone too far. I still think we probably have another leg lower in equities into the final low, much like we had in 2018 as well. So I'm not short equities. I've been buying bonds and I've been buying kind of growth equities, all the stuff that's super beaten up, because I think that the cycle plays out faster than people imagine and the outcome is a U-turn by the Fed. As soon as the ISM approaches 50, they stop. Because obviously below that, you start seeing unemployment rising, other bits and pieces. So, my guess is we get an ISM print of around 52 below consensus. And then by July, it's below 50. And so they're done. That's my view. I think it's done. And if you think of it, crypto is a retail market predominantly. And you've just taken, everybody's wages have gone up a bit, but prices went up more. So you've got negative real wages. So what that means is, if you want to pay for your food and your gas bill, you don't dollar cost average into crypto. It's a pretty simple calculation, and it worked pretty consistently. So we're seeing that. It's a long duration asset, and it's sold off. Now, the question is inflation beaten? I.e., is the rate of change going to come down? If it is, rates will come down, crypto will go up. And it's somewhere around this window, and I don't know where this window is. Could we have another puke? Pretty likely. The 60-month exponential moving average on Bitcoin is about 23,000, 22,500. Could we get there? Possibly. What does that mean for ETH? I don't know. Below 15,000? Possible. 1,500? Possible. But in the end, the macro is the driver of some of this. There's nothing else going on. There's no real negative news in the space. But what I'm also seeing is peak fear sentiment. I've never seen anything like that.
I must say, I've been here for a while, and I think I also haven't seen peak. I haven't seen fear like this in a long time. Obviously,
and anger, fear. What I try to figure out is how can I model network effects in a reasonable way? And I did a lot of work on it, and I found it was the two things together explained pretty much everything. It was the value exchanged, let's say on a weekly basis or monthly basis, you choose it, in dollar terms, multiplied by the number of active users. Now, the number output is not important. Just put it against the price. It's identical to price, and it doesn't have price in it. So it's telling us that the market is pretty efficient at pricing the network. Now, what you're saying is the network growth is the thing we're trying to estimate, right? Because then you've got the real value add. If you can forecast network growth, then you can basically forecast price. But I figured out how to forecast how to value price. Market's bloody good at doing it. The only one that's traded somewhat differently, and it's too early to say, was ETH. It traded at a premium to that, and I think it's to do with the burning mechanism that meant that we've got a slightly different supply structure. So I would probably have to model that out, but I'm not smart enough, but I'll figure out how to do it at some point. But it was the value. So if you think of Bitcoin exchanges more value each week than Ethereum does. Ethereum has a lot of transactions. It's a red herring. Transactions are a red herring. It's total value, a number of active wallets, and Bitcoin beats both. However, if you look at Ethereum, the change in values, the rate of change in those two values in Ethereum is higher, which is why Ethereum's been outperforming Bitcoin over the last couple of years. And I found it's really useful.
So on that model
forecast, but it shows what price is, and price is pretty good.
So does that still make you as bullish or more bullish on Ethereum than you are on Bitcoin? Because at one point you were much more bullish on Ethereum than you were on Bitcoin.
Oh, I still am, because I think, to Urian's point, is, listen, if you believe the future is in the technology, in blockchain technology, then this whole digital asset space should outperform the safe haven. That's just how things work. It always works that way. And therefore,
there's a higher beta.
There's a higher beta. And if you're in an exponential uptrend, because you're in a network adoption model for the entire space, not just for Bitcoin, then it should outperform over time. It's as simple as that. It's not a value statement about, I don't like Bitcoin because X and I prefer Ethereum for Y. It's all about network adoption models. Once you understand that, you free your mind of all of the narratives that are in the different buckets.
So it's just about higher beta, and that means that if we are near a bottom, or if we've bottomed out, or if we're
it's higher beta plus the network growth, right? Because there's a lot of high beta altcoins that have no network, which is why they keep failing. You need to find the ones that actually have network, and that's the key thing here. My core position is mainly ETH. I moved from Bitcoin to ETH, but either way, and I just had a basket equally weighted of other stuff to be involved. So it's a small weighting. I think it was like 15% of my overall position, equally weighted. And you use it as a VC model, which is, okay, we'll see. And then, okay, sure, if something big comes out of it and you can change your weightings over time because you have more confidence in that particular thing, it works. But, you would never bet 100% of your net worth on WeWork, and before you know it, something goes wrong.
So there's Raoul with his latest outlook on the space. Now here's a hypothetical question for you. What would you do if someone handed you $100,000 right now? Personally, I'd probably dump it all into Bitcoin. Or maybe Luna, I heard that's the future. You know what they say, buy the dip. Except no one mentions what to do when the dip keeps dipping. Honestly, I don't think anyone is 100% certain what they'd do with $100,000 right now. That's why people are sitting on more cash now than in the past 20 years, according to clients surveyed by Bank of America. And with every major index headed to bear territory and the crypto market losing $1 trillion, the Wall Street Journal says the options are shrinking. But I know an option you could potentially do with it, for real this time. Because get this, Bloomberg recently asked some financial experts this same question, and the result, they overwhelmingly recommended investing in alternative assets, like this one you probably aren't thinking about. I'm talking about the white hot art market, and when I say hot, I mean it. In fact, the Wall Street Journal calls it amongst the hottest markets on earth. Don't believe me? This Andy Warhol painting was purchased for just $5,000 in 1967, and just last week it was resold for an insane $195 million. For perspective, if you average that price appreciation over those 55 years, that's $10,000 a day every single day. And it's not just the Warhol. Contemporary art pieces have outpaced the S&P 500 by 164% for the last 25 years, all while sharing a very low correlation to the equities market. This got me so interested that I reached out to the only platform I trust for investing in art, Masterworks, and they were super pumped to partner with my viewers. What makes Masterworks so compelling? Since launching, the 3 paintings I've sold so far have returned a net annualized gain of 30% to investors. And even though I have to add that past performance is no guarantee for future results, those numbers blow my mind. No wonder they've already been valued at over $1 billion. Demand is high, so there is a waitlist, but my partnership with Masterworks means my viewers have priority access to skip their waitlist. Just click the link in the description. A big thank you to Masterworks for sponsoring today's video, helping investors with one of my two favorite alternative asset classes, contemporary art. But for now, let's check in on my other favorite alternative asset class, and it's on-chain data. Turning to Ethereum supply held on all exchanges, despite the huge dip in price, the downtrend of Ethereum being pulled off of exchanges is still in full effect, with investors still happy to DCA in and hold ETH for the long term. With the merge happening at some point this year and issuance being sliced, this supply shortage will have to come to a point sooner rather than later, so the on-chain data does back up Raoul's thesis that the bottom is somewhere close. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next video, and as always, have a great day.